Yes, sir. It's your boy B Hayes back with another one, guys. Before we get into it, let's give this video a thumbs up. If you're new around here, you already know what to do. So the stock market is tanking, guys, ahead of the Fed's meeting. We know we had a solid start the week off. Monday and Tuesday, it was very choppy, just as the day as well. But overall, the market continued to uptrend for both days. We was regaining. So now, the day of the Feds coming out, we know the stock market is going to be very emotional and very choppy because they don't know which direction the Feds or what exactly the Feds is going to come out and say, guys. Being for the fact we already have expectations and already have a clue of what the Feds is going to do because they already been speaking of it. But we know the Feds have been changing its mind and going back on its word and changing the aggressiveness of how aggressive they want to be with taming inflation. So you never know what the Feds might come out and say or know what type of bait and switch they're trying to do, guys. Because like I told you guys, even though interest rates is through the roof, inflation is through the roof, Biden is in office, the war is going on, COVID is going on, even though all of this is going on, that doesn't mean, you know, too much from my standpoint, because the economy isn't shutting down, the world isn't closing, these businesses is going to continue to keep thriving. Don't get me wrong now, that's why I say quality over quantity. Not every business is going to be, every shift that we happen is going to be a shift where businesses, big Fortune 500 companies get shutting down and get taken away, get knocking off the chessboard. That's going to happen by all means, definitely so. But my thing is, if you diversify, investing in quality companies, you most definitely is going to be able to take any type of hit that come towards America. America is going to overall continue to thrive, guys. And of course, I'm not saying that for every single company, because some companies are going to fall regardless. A lot of companies not going to make it. But overall, the majority of our companies in America is going to continue to thrive, guys, thrive regardless of what's going on in the economy, regardless of if they saying people is not spending money as they was and being consumers as they were before. Guys, people are still spending money like never before, even though prices is through the roof on things. So anyways, let's go ahead and take a look at this, guys. See what we can expect today from the Feds. We know stocks fell ahead of the consequential decision by the Federal Reserve. The Fed's meeting is at 2 p.m. It is expected to raise rates by a half point in a single move for the first time since 2000. Fed Chair Jerome Powell will speak at 2:30 p.m., guys. We know the Feds put their own dictation on the market, meaning companies can blow expectations for earnings out of the water, out of the park, and also double up in revenue over the previous year. And we'll still see those companies come down tumbling in price action. Very weird. And we could also see companies have negative earnings, lose revenue and growth, down 43% from the previous year. And we could see those companies sustain the price action they're currently at, or even start the trend higher when it just doesn't make sense. But a company individually can't put a specific price action on its stock price by having good catalysts, good news or bad catalysts that make it go whichever direction they want to make it go. They don't have the power to do that. The market's going to do whatever the markets want to do. But whenever the big dogs, the Feds, that's why the market is so scary right now, on edge, don't know what it want to do, because it know the real big dogs that really decide what the market is going to do is the ones that's about to speak. That's the Feds. Whatever they say, however if they say things are smooth now, they say we're going to be able to tame this thing. We're going to be able to get this thing on a balanced equation very quickly. We're going to be able to not be able to have to do it so aggressively and ease our way into it. However they worded and put it out, that's going to put so much ease on the market, and the market could possibly start soaring. But if they say, hey, we're going to attack this thing, we're going to be very aggressive, we're going to shrink balance sheets a little more than what we said because we want to hurry up and get this thing tamed, then the market is going to come down tumbling even harder. So they going to put their decision and their direction on the market however they choose and see fit, guys. But like I said, though, guys, even could be tricky, though, because I don't think the market can bear too much more pain, guys. I don't think the market can go too much lower, guys, than what it already has done. And if it does, best believe your boy will be selling some things, guys, because getting in the market at these prices and owning quality top dog companies at the prices that you're able to get them at now is going to be, game changing, because you're not going to see these prices once this market turn back around, guys. It would be a wow. So let's take a look at this, guys. We know Uber and Lyft both tanked after earnings, guys. And Lyft is looking very, very attractive at where it fell to. So U.S. stocks follow ahead of the meeting, guys. So we got the meeting approaching. We know how the market is going to react crazily after they speak, guys. So we're going to wait patiently for that. And just know, don't be fearful, don't be scared. Just use this time to steady accumulate to legit quality companies, guys. So you already know that's all we got for this video, guys. Just want to give you guys a quick update, let you guys know our opinion on the market, on what's going on. I love you guys. Consider joining the family. Add me over on Instagram at the B Hayes Show. I love you. We out, and God bless you. We gone.